So Patrick, we're here today to talk about the Irish property market outlook. But before we, I suppose, start looking forward, it's important to understand where we're coming from. I think 2022 was quite a mix in terms of the economic backdrop. There was some real positives, really strong GDP, full employment, the highest level of employment on record, which is fantastic, 149.3 billion euros on deposits, so strong personal balance sheets. But obviously some challenges such as rising inflation rates and also increasing interest rates as a result. So we might just have a look at that last piece around interest rates. How do rising interest rates impact commercial property? When
interest rates increase, the value of property assets will be affected downwards. They will move downwards. Debt-backed financiers, their costs increase. The costs of development also increase. So it's a negative impact, rising interest rates on property values.
So when the interest rates are increasing for debt-backed buyers, the difference between the cost of debt and yield gets smaller. So they're looking for a higher income yield, which obviously, as you said, drives down the capital value. Okay. But it's important then to remember the total return of property isn't just based on the capital return. It's also made up of the income return, which is a hugely important component, which we saw in our own fund in 2022. Can you talk about for a moment, Patrick, income return is obviously driven by tenants or occupier demand. What is the occupier demand looking like coming into 2023?
Well, in the office sector, we've seen the tech companies are starting to pull back, as the headlines in newspapers have shown. But in that office sector, we've seen professional services firms such as lawyers and financial institutions continuing to take new space. They're more focused on having people in the office 3, 4, 5 days a week. So they're back to sort of business as normal in terms of they've always been expanding and taking new space, and they're back to that policy now. There is a market for grey space out there, which is space which is let but surplus to requirements. It would generally be fully fitted. So that's attractive to tenants who are looking for new space. They don't have a long lead-in time to occupy it.
And then what about in the retail sector? So we also probably have about 34% invested in office in the fund. We have just over 30% invested in retail. What kind of occupier demand do you see coming through there?
Well, 2022 was a very good year for the occupational side of retail. It's now European, some US and well-capitalised Irish retailers who are driving the market. Grafton Street last year, very good take-up of vacant space there, and we're anticipating that Grafton Street itself could be fully occupied at the end of the year, or very close to it.
Okay, well, it's great to see that coming through, particularly in retail when we had a lot of vacancy there for a while. That's super. So you touched on there, just coming back to office for a moment, good quality space. So occupiers are looking for good quality space or indeed sustainable space. What does that mean for offices? What is sustainable space?
It would be space with a very good, built to a good specification, either brand new or refurbished, have good energy efficiency credentials, a very strong BER rating, might be high B or even an A rating. And generally why tenants are looking at that is because they're looking for low running costs, and will my heating and lighting bills be lower than the normal building out there, the older type building. Then you have an issue for some landlords that have that older stock. They need to reposition or refurbish that, or it could end up that some older buildings just will not be attractive whatsoever to new occupiers.
I think, as you touched on there, the demand coming from the occupiers now, particularly the good quality tenants that we want to have in our portfolio, is for green, sustainable space, which is hugely important. So, as you know better than anybody, Patrick, as Head of Planning and Development, Aviva has developed or delivered many green buildings over the last couple of years where we have achieved those very strong credentials. It is hugely important for the environment and also for the performance of the fund. So listen, dust off your crystal ball, Patrick. What would your 3 key takeaways or 3 key things to look out for in 2023 be?
Well, I think it's just you're going to give the reoccurring theme of ESG and sustainability across the occupier markets we talked about, but also in terms of the investment market. Investors are going to be focused in on those type of buildings, particularly in the office sector. Investment turnover in the overall commercial property market is likely to be somewhat below trend in the first half of this year, but we'd see that improving in the second half of 2023. So the economic outlook becomes clearer. And also just something we haven't talked about already is the industrial market remains very, very strong, particularly on the occupier side. So we see continuing rental growth in industrial properties in 2023.
Super. Thanks, Patrick. So to summarise the 3 key points there, sustainability, which we're hearing across all asset classes time and time again. Also, the investment in property and commercial property in 2023 is more likely to be towards the back half of the year, but trending in the right direction. And occupier demand for industrial and indeed other sectors is continuing to be very strong this year. For more information on the Irish Commercial Property Fund, please contact your financial broker.